Good afternoon, everyone. A very warm welcome to all of you. And I'll just please allow me to give a brief about our panelist. So today in panel we have very first guest we have. Give me a second. I'm so sorry. I'm not able to move it. Okay. Yeah. So we have Mr. Shashank Randev. He's founder VC at 100x.vc. Shashank brings entrepreneurial and investment understanding with 15 plus years of cross-functional expertise, acquired a depth and breadth of experience from having worked in large companies, being the founding member for SaaS startup acquired by a Fortune 500 company to an early stage fund investing in technology-enabled startups. Shashank, as I told you, is a founder VC at 100x.vc, which is India's first venture fund to invest in early stage startups using iSafe nodes. For that, you can send your pitch to the given, go to the website 100x.vc and you can send your pitch text to there. And he's also an angel investor and advisor with a keen interest in B2B emerging technology startups. Previously, he was the founding member and vice president of VCC Edge, the SaaS data platform by VCC Circle. He has also worked with NIIT Limited and Zensar Technologies Limited. A very welcome, Mr. Shashank.
Thanks, Krati, and looking forward to the session.
Thank you. Moving on, our next panelist is Mr. Gaurav Prakash. Currently, he's Chief Strategy Officer, Zone Startups India, tech venture builder, business leader, and an ex-commercial banker with over 23 years of cross-industry and functional exposure. He has been delivering digital transformation of traditional businesses, actively learning the art of stakeholder community and network building, as well as venture evaluation. He has built businesses from scratch, established new global markets, products and relationship management spanning technology, IoT, like IoT, blockchain, SME banking, and consumer goods sectors. He has extensive experience in leading teams to scale up B2B and B2B2C tech startups, SMBs as a segment specialist, co-founder, and a fundraiser. He has driven by the passion to build lasting relationships, committed to expanding one circle of influence, and to keep learning from successes and failures alike. He is a practitioner of ideate, plan, execute, learn, teach philosophy. A very welcome, Mr. Gaurav.
Thanks a lot, Prati. Pleasure to be here.
Thank you. Moving forward, next panelist, we have Mr. Raj Bhatt. He's practice head entrepreneurship education at Wadhwani Global University. Raj has 14 plus years of entrepreneurial experience in his 26 plus years of professional life. Before starting his entrepreneurial journey, he worked with organizations such as Godrej and Voicy, MFG Co Limited, and Wipro. He was founder and managing director of Webware Technologies Private Limited. Currently, he teaches and practices entrepreneurship at Wadhwani Global University. He is also an investor and mentor to multiple startups. He is a chief evangelist at enterprises.in, a social impact movement to bring together some of the best talent in entrepreneurship education and mentoring with a collective goal of bringing down the failure rate of startups and small and growing businesses. His area of expertise are entrepreneurship education, online education and training leadership councils, growth stage mentoring, organizational learning and development and knowledge management. A very welcome to you, Mr. Raj.
Thank you, Prati. Always
Thank you so
wonderful
much.
to be here.
A very welcome to all of you. Over to you, Ronald, sir.
Thanks a lot, Krati. Thank you. And welcome all, formally welcome all, basically. So, yeah, we run this program for 3 years, and this is kind of, concluding with this panel discussion. And we wanted to give a sort of, perspective of mixed sort of panelists, So, Shashank brings in investment background, and Gaurav has raised the fund in the past. So he know how to basically, convince the investors. And Raj has been handholding startups for some time now. He has been mentor and investor also, angel investor. So we'll actually get, different perspective of different people who have different expertise. So look forward to this kind of discussion actually. And so perhaps, to kick off the discussion, I'll first perhaps, ask Shashank. So you in the past you have a lot of portfolios. You personally have invested in as an angel investor in seven startups, and 100x VC has invested in 50 plus startups. So what exactly you look forward to from an investment, from a startup when you are, taking that investment decision? So what basically you look forward to, the key factors you focus on, all, if you could talk about that.
So, in the interest of expressing clear thoughts to the audience so that they can take maximum value and be candid, what investors look for is, can we make money out of this transaction is the beginning point, right? And everything is ancillary to that, right? And at 100x also, and in my personal investment thesis also, I look at the same philosophy, and we break it down in multiple things. The core 5 broad parameters or thesis are at our end.
Shashank, so sorry, really sorry, your voice is very low.
Sure, just give me a second.
Is this clear?
This is better, far better.
Okay, super. So at 100x, we are largely looking at 5 broad points, and then obviously we break into specific when we start engaging with the startup. But largely we're looking at founders' backgrounds, their ability to kind of build a scalable business, and within that we are looking at the total addressable market or the opportunity. Business model is the third, and obviously within all this, is there a business moat over there? Is there a unique IP over there? Now, this is the thesis, which is more or less standardized across many funds. And one fund might focus on founders, the other might focus on the product. But the kind of stage which we guys come in at is the ability for the founders to kind of quickly move to the next round, and hence that is a function of how quickly they're progressing. So what are the metrics they're tracking? If they launch a product, can they actually grow? And many founders forget this, grow 30% or 40% month on month kind of a thing. And those are the initial things which you're looking at, right? Those are the signs which you're trying to read. It's very unpredictable. We can't really predict which ones will work out, because as a fund, as angel investors, you typically come in at a very early stage, minimal viable product to early traction. But these are some of the things which we look at, and in hope that it will grow into something meaningful. We are a fairly young fund right now, only 2 years, but and we yet to see our exit. But these are the broad things, even as an angel investor, which I try and look at in the companies we try and back.
Okay, yeah, thanks a lot. So for the audience, I'll request, if you have any questions, we'll take the questions at the last. You can type this question in a Q&A section also, or a chat section. And I'll request Krati to please keep an eye on the questions if there are any. Otherwise, I have a set of questions. I'll continue to ask those questions. So Gaurav, I have a question from you. So these days we have seen a lot of platforms have come up, and which are facilitating investments and all, where investors are pulling in very small money, maybe lakh or 2 lakh kind of a money. So whether these startups should go for these kind of investment there, where small multiple investments are there. So what is your viewpoint of view? Because you have raised fund, how difficult is to manage so many investors. What is your thought on that?
Okay, let me attempt this. First and foremost, VC as an alternate investment class is growing in India. And this growth has been catapulted predominantly by this democratization which has happened, where small investors have come in, and there are platforms which pull in. Absolutely required in the ecosystem. The second part is actually the answer to the question that you have. Why not? As an entrepreneur, I have to raise funds. If there is a platform which is coming, which has the capability to fund, I would surely go. And that's a key element of entrepreneurship, which is openness. You have to be open. You have to go and meet as many people. The first port of call, Ronald, and to the audience here will always be your own source, whether you're bootstrapped or you go to your friends and family. The moment you go to the next level, the external angels, I would say, or the angel networks naturally become your second level. As an early stage entrepreneur, you need 2 things coming in through the investment. One is the funds. And the second is a partnership approach. If you have a network which is coming in, the one key aspect will be that your investor is also having a democratic principle in mind. They are representing multiple investors, and they also have to synthesize expectations, and they would have built it while bringing it together. So the partnership that you get through various investor stakeholders who could turn mentors, who could help you connect, is a very critical byproduct which every entrepreneur will look at. So that is my take. And we had approached when we were raising funds a few years back, and the experience has been phenomenal. Although we didn't take, but a very good experience. I mean, the different perspective that an entrepreneur gets helps you to fine tune your own, not only the pitch, but also your business model and the finance model and kind of stuff.
Yeah, thanks. It's important. Yeah, so when you're raising a fund, so whatever means it's coming, you should be open to that. Yeah,
absolutely.
Anybody wants to add? You can. Anybody wants to pitch in? Any panelists want to pitch in to any of the things? You can actually add on. So Raj, you want to add?
Ronald, let me kind of add a few perspective here.
Yeah.
Is I always believed that whether you are raising 100,000 or 10 million, right, as a external fund coming into you, maybe through angels, seed funds, platforms, early stage VCs, the kind of effort I think that will go is the same. So my advice to startups always is key, if you're preparing for this, I mean, because fund, see, I mean, this is some things that always come to me, that people think that, we should raise funds because now we are in some trouble, or, we can't kind of take this up forward. I mean, this doesn't work really, right? I mean, fundraising is to be a very planned activity, or to say that, yes, this is what we are going to do after whatever, 6 months, 1 year, 18 months, I don't know what it is. So more importantly, and let me just add to what Gaurav also rightly said, today you have to also look at the quality of money. Okay, where is the money coming from? Because there are so many individual investors crowding this marketplace that everybody, I think, is today wanting to be, I don't know what is it, that everybody wants to put some startup funding in their portfolio for various reasons, and it's a crowded marketplace. But if the quality of money has to be judged, I mean, say somebody like an 100x VC, I mean, it's a marquee fund, great quality people, and you can put it down and say, the early funding came from some good venture capitalist funds. So I'll always advise people to look at the quality from where the money is coming. Quantity, of course, is important, but with quantity, I would put a larger emphasis on the quality part of it.
Yeah, so you kind of answered my next question to you actually. So startup early stage, there's a lot of startups who are participating in this panel discussion. They are very early stage startups, most of them actually, and they intend to perhaps raise fund down the line, perhaps 1 or 2 years down the line. So what would be your suggestion for them, how to prepare it, since you have been handholding a lot of startups, early stage startups specifically, how to prepare for that? What should be line of action for them?
Oh, it's a whole process. I mean, let me not kid this part of it. I think most startups miss out. They think that fundraising is something that can be done on a Friday evening, and by Sunday morning you will get a check in your, or a Monday morning you'll get a check in your account. It doesn't work that way. Never worked for me. When I was raising fund, I raised fund in 1999, but that's a different world, different time zone altogether. It has to be absolutely a planned activity. One of the founders have to always dedicate, and say if there are 3 founders, and I would say that one of them will have to take this mantle and say, I am the guy who's going to go out, while the rest 2 of you manage the day-to-day operations. You need to kind of, most importantly, I think people miss out in fundraising, and I think I can get some collaborative comments from both Shashank and Gaurav on this. You need guidance, you need somebody in your corner who will guide you through the process, not from a VC perspective, maybe a mentor, maybe a coach, maybe somebody who's been there, done that, understand. See, everybody makes business plans. Yeah, I mean, honestly, I mean, today, I think all these are passe business plans, some great business models, some stories, everything. I think pitching has now become like, you know what, I mean, it's a commodity skill that everybody has. So that's, you see 100 pitches and you say that all guys have done a great job. But I think you need somebody in your corner to understand, to take you through this whole process. So I never say VC raising fund is an activity. It's a complete whole process. And when you do go through that process, it shows at the other end, right? I mean, when a VC is seeing you, he can actually guess. I mean, he can actually figure out that yes, you have put efforts into this process when you are, when you have come out over here. So
Yeah,
that for me is very, very important.
great. Gaurav, you want to add something because you have done that, the entire process, you've gone through this. So for early stage startup, what would be your message for them? How they should be preparing?
No, Ronald, completely echo Raj's thought. There is no two ways. It has to be a process. And I actually will share my experience both in India and in the Bay Area. Uh, Preparation is the key. And while when we started in India, we did it all by ourselves. We came with some experience of working in the corporates, and I had turned an angel some years back. So some experience were there. So we were not the yuppie geeks kind, but we were more mature entrepreneurs. But we never let go the process. So the four questions that we always asked ourselves were to do with, what, when, how, and how much is the preparation part, which is something which all entrepreneurs should live day in, day out, at least within the founding team. One, a representative, which Raj said, absolutely a given, it's a full time job for the duration of the project of fundraising. But you have to cross fertilize with your, let's say, the other founders and also with advisors who you have. So we had the lucky, the fortune to have some good advisors, and we would practice pitch. So we would go ahead and practice the way we would pitch an investor just to get that confidence, because the window is very short and small. Friends and families are fine, but the moment you move up the channel and go to an institution, you just get one chance to make an impression. And Shashank will agree. I mean, there is a pitch competition. You go and make a pitch. That is your only chance to, impress and make a lasting impact. So the person who is listening, an analyst or a principal or even a partner, remembers you in flesh and blood, having seen you, and carries your business ideas forward to the next meeting.
I think some problem with Gaurav's bandwidth. So let him join back. Meanwhile, I'll just come to Shashank. Shashank, what stage you think startup should approach an angel investor or VC? Because as an incubator, we have been facing this question again and again. I've just started, maybe
Gaurav,
ideation.
Gaurav is
Gaurav,
back. Gaurav.
you want to
I'm
finish
so
the point
sorry.
first? Yeah.
Yes, let me do. In fact, it's pouring, so the network will keep. I'm so sorry for this.
No problem.
So I don't know where I left, but what I was saying, preparation is important. Where you answer what you want, how, and how much, and then comes the question of you have to also understand the investor's funding theme. You can't go to an investor who's looking at, let's say, a specific domain and want funds. So that research is required. That is where you answer the questions of, uh, why are you going to a particular investor, and when are you going to who, and when are you going to that particular investor. So those are the kinds of questions that need an answer, and it becomes a process where you have to keep going without getting demotivated. The hit ratio may be 1 or 2% in terms of getting a term sheet out, and maybe a 5-10% or maybe 20% in terms of going and getting the meetings, the second meetings.
I think we lost him again.
I lost him again. But two important points, which Raj also mentioned and Gaurav also mentioned, it's kind of, we have been also telling our startups. One is it's a full-time job. It takes time. I've seen people getting disheartened only, after making 5-6 pitch and 2-3 months time, they get sort of disheartened. I've pitched to so many people, but nothing is happening. But it's a full-time job. You have to prepare for some time. It takes 1 year, 1.5 odd years. And one partner has to totally perhaps be dedicated on, raising investment. So that is one important thing which Raj also mentioned and Gaurav was also kind of saying. So yeah, Shashank, coming back to you. So a lot of idea-based startup, ideation level startup also approach us, and they say, "Ki, sir, I have this idea, I have to raise fund." Uh, because again, a lot of young entrepreneurs or young startups are here. So I want to specifically ask this question from investor point of view: what stage a startup should approach an investor, angel investor, or VC, basically? If you could
Sure. Let me begin by giving an example of myself where I started out by becoming a founding member for a SaaS company, and I had the privilege of attending a few board meetings along with my then founder. And in those founding meetings, what was really interesting was, I used to make notes when my founder used to tell me things, right? And then I saw the founder making notes when the investors were talking to him, right? And and that goes on to show that eventually the founder is also liable and responsible and answerable to somebody if you've taken external capital, right? Now, but before you move into funding, before you move into the glamour around the media announcements, and this is very personal, this is my personal thought, I am not echoing the fund's thought, or this is not a public sentiment, this is my own analysis or my thought, that what has happened over the last 10 years is that we've seen multiple startups come around. There's a good positive drive across the country with incubation centers. Many entrepreneurs are wanting to become founders, which is the first step. The negative thing which is happening is that everybody ends up going to a Your Story, Tech Circle and Tech Crunch and saying, yaar, isko phala paisa mila hai, to brilliant, let's start an idea and go out for funding. What they miss is the entire middle piece, which is the most critical thing. The motivation to build a long haul business. And many a times that is the missing link. If that is not there, and if you have started a company just to raise capital and just to be in the limelight, and you really don't have a long-term objective, and you'll be surprised how many founders we come across who have that mindset, who have this mindset to raise money to generate an income, and not in terms of creating wealth for the company, right? Despite the fact that they own equity, they don't have the mindset to kind of build out a business. They think we'll grow at 10% a month only. They want to build a lifestyle business, but they don't want to use their money. They want to use the investors' money, right? So the clarity of thought of why, and Gaurav mentioned earlier that once you go out and raise money from a venture capital or an institution, remember they're putting in money because they are used to putting in money in outliers. So this means you are pegged to perform 100 times of what you're currently doing, and this is for 100 times of the first check, because the first check has come in, the investor wants his return, so you are expected to eventually perform 1,000 times. Is that the mindset of the founders? And that is the missing link, right? So the founders should be looking at raising money, in my opinion, only when they have figured out from an idea, they have broken their FDs, they've sold their bangles, their wife's bangle or whatever, right? They've because they are passionate about that kind of business, and they've reached a product market fit of sorts. So भाई पहले 10 client POCs आए हैं, free में गए बेशक, या they've done, there's a requirement, and now they're like, okay, I can sell this product, but now I want to amplify it. I need a team. I need to move to another city. When you reach that kind of a good problem is when you should reach an investor, because then an investor can read through the passion, can understand the genuine challenge, and you don't really have to sell hard sell, because founders need to understand investors like us are dying to fund good businesses, right? So our requirement to fund companies is equally higher than companies wanting to raise fund. But till the time they do not crack that piece, they'll always struggle, and you'll always find founders who have मैंने 4 investors को pitch करा, I'm disheartened. That is a right set of founder knows what he's building. He's like, I'm very confident. मैं 20 करूंगा, मैं 100 investors को pitch karunga. Like, I know I'm going to crack the 101st one because this model will click with some investor. That's the passion which the founders need to have, and they need to build it to that level, not an idea stage.
Okay.
Then you will not, you're not prepared to handle the pressure which will come when you're required to perform 1,000 times. So those are my initial thoughts on, how founders need to really sit down and realize why they want to approach an investor.
Okay, it's just follow-on question in this because I keep on hearing this. What is the chance of ideation level startup to get a investment from an angel investor or a VC?
VC zero. Why? VCs will never invest
Absolutely.
in an idea company.
Absolutely.
But because there is no way of determining how the company is going to perform. If you build a product with zero customers, maybe. Idea, absolutely no. And if the founder is at an idea stage and you really are looking to raise money, you can possibly take it from your uncle, your family and friends as angels who believe in, who know you better than an institution and can. And if with that money, if you're able to build out, then obviously you'll be the VC round will be quicker. But VCs will not invest in idea stage. That concept needs to be very clear for founders.
That's what I wanted to emphasize. Actually, a lot of startups are there.
Idea stage, unless it's a very high tech, definitely not consumer product, not some platform business. Let's assume that it is, in the realm of a biotechnology, something that is really high tech. There are grants available. I think it's sometimes better to go through a grant approach. VC, forget it. I doubt even angels or seed would also want to, touch a idea stage. But if it is a high tech possible, I don't know, 1 in a million kind of a thing, you should look at a grant. I think that.
So just to add to Raj's point, and this is more from our fund perspective, we are a micro VC fund. We invest 25 lakhs in companies which are not idea, but minimal viable product, to some companies which have been doing 1 crore in ARR also. After having funded 50 companies, we've managed to raise 20 million USD for almost all our portfolio, cumulatively, sorry. And out of which 68% have been funded by institutions, follow-on investors like Sequoia, Lightspeed. But balance 32% is funded by smaller angel networks. The reason for that is because VCs still feel that some of the companies are early, despite us putting in the money, despite they're reaching a certain MRR. Growth stage VCs will still not invest. They will still watch and observe, right? So where would an idea stage startup stand a chance, right? So they need to research and understand what kind of companies are investors backing.
Absolutely, that's the reason I asked questions. So perhaps ideation level or idea level, only startups or the founders who have some background. Maybe they have actually got one exit in past, or perhaps they have got experience.
Even
then difficult.
Only what Raj said is maybe the closest, where you have a deep tech IP biotech which requires some level of grant. It requires patent, but there is no product. Maybe. But founders,
you have the credentials. You have a PhD, or you're backed up by you've written a paper. I'm saying that's probably 1 in a million. Huh? I'm not even. I don't even.
So we recently evaluated a company, and second time founder. They just sold their company, this was sometime in January of this year. And both credible founders, excellent pedigree, 15 plus years of work experience. Short in terms of all the right parameters, building something out, something new. We like the idea. We decided not to invest in them because there is nothing right now. So till the time I don't see a product or a some tangible thing, it's very difficult. So we decided not to invest in them right now. Possibly relook at them 6 months down the line. So even if you're a second time founder, not necessarily, until your Kunal Shah and Sequoia decides to kind of back you up. That's a different story.
Yeah, like Raj, we used to talk about 3 Fs. I mean, at ideation level, perhaps you should think about friend, family, uh, fools, or
And fuels.
father-in-law. I don't know. Gaurav, you wanted to add something, I
Yeah,
believe.
in fact, there is one ray of hope which has started coming in. Especially, I mean, I would echo the thought of pedigree and PhDs and research oriented, which is the corporate venture funds. Usually, corporate funds also look at enterprise ready startups, but there is now a stream of funding which is happening in applied research. So you have an idea, you filed a patent, and that could not be I mean, it could be in the infrastructure, tech infrastructure space, where you are solving a particular problem that particular startup is able to give to a corporate, and it gets fits into their requirement, maybe by way of licensing, royalty, or whatever. So some of these corporates, I mean, some experience from the Bay Area, where they've started looking at PhDs with their applied research patents and ready to fund that idea. So that is, apart from grants, that could be another line where you could go ahead and raise funds.
Yeah, absolutely. Absolutely. So, Raj, basically, I'll come on this to you because, I've seen a lot of startups. They actually make their business plan to raise investment rather than, concentrating on the business. So, what would be your mismatches for them?
Okay. I mean, you can actually catch it. Those
Absolutely.
hockey stick projections, and those. See, because honestly, I mean, like I said, no, business plan pitching is now become like a favorite hobby for entrepreneurs. I don't know what they do. So yeah, I mean, business plan is good enough, but I mean, it's at a plan level, right? I mean, it's like what you want to do. More importantly, I think more important, this is my advice to all startups, okay, irrespective of whatever it is. More advisably, you have to really figure out what this money is for. I mean, it's not a medal, right? I mean, we see funding today. Somehow things, it's like a medal. I mean, if you're a startup and not raised money, in the first whatever 2 or 3 years, it's considered to be like a big blot on your whatever entrepreneurial abilities or something. Like people say, you don't raise money. The point here is, of course everybody needs money. I mean, I don't even doubt the fact that today, in today's competitive world, that you can really bootstrap your way to, I mean, Zerodha is a absolutely an outlier case where there was no external funding. But believe me, it is like the Infosys model, where 7 people with diverse backgrounds came together and formed a business. I always say that is not the norm in India. That is either an exception, because 7 people coming together, sticking towards and then taking it. So let us look at those middle of the bell curve kind of a thing. Business model, and I think a very strong understanding of I mean, that there's Jerry Maguire movie favorite dialogue of "Show me the money." I think you should have a model that actually tells where the money is going to come from. Okay, and unless you figure it out, and it is I don't say that you have to, I mean, you build it, but you have to also figure out where will my money come from eventually. If that clarity is not there in the entrepreneur's mind, okay, entrepreneur's mind, and he's going to just think, see, we have a very simple model. I have built something which I think is very important. Somebody is going to put money into it, and once that money comes in, some magic is going to happen, and I'll have customers lining up, and people will just download my app, and people will just click on my buy button, and people will just pay me the money. That magic, I think it's like that old alchemist theory which had about 200 years back, that you mix certain chemicals and gold will come out of it. I think that is, I mean, startups need to understand this doesn't happen, right? So figure out that model. I mean, look at that model and ask it like, I mean, in the Hindi sense, you say, paisa banega kaise? Where is that money going to come from? It could have multiple revenue streams. It could have things that will happen in the future. Maybe there is an interlinked model of something that will happen today, something that will happen tomorrow. Have you figured it out? My question is always like this. Are you seeing it through? If you're not seeing it through, don't expect some VC will come and throw some light, and enlightenment will happen, and money will come, and magic will happen, and it doesn't work that way, honestly. I think we need entrepreneurs with a very clear sense of how the business, just like a mechanic knows how an automobile works, right? I mean, there's no doubt in a mechanic's mind. I mean, he may not be the engineer, he may not figure out all the technical terms, but like a guy, he knows yaar gaadi chalta kaisa hai. And believe me, this sense is very common. Na? I mean, you go to a normal, any street shop vendor or any guy, that guy has a clarity on how that money is going to come. Unfortunately, startups live in la la land. I mean, I'm sorry to say this, I'm not kind of generalizing here, but after being through so many presentations, sitting through so many pitches, I'm telling that people live in la la land, and have this very exotic, thing about, something grand is going to happen. It will happen. The magic happens. I mean, we have some of the best entrepreneurial success stories with backed by funds. Believe me, I have thanks to Wadhwani Foundation, now we are in 23 countries, so I have had the chance and opportunities to meet people across this so-called nothing like India, boss. I'm telling you, nothing like the magic that happens in India doesn't happen anywhere. And it's a great ecosystem you guys are in, RNTU, I mean, as an incubation space, Shashank coming in as a micro VC, which is an amazing concept. Gaurav, building those platform where you can all come together. I think we are living in great times, but you know, don't expect the, something that will phenomenal that will happen. So go prepared, figure that model out, sit, take some help, understand where the money is going to come from. Then you start your, pitching journey.
Yeah,
So just
thank
adding
you.
to Raj, and
Yeah.
I think Raj has touched upon a very, very important point, the business model and how to make money. And just to add to that, one more point which we've seen in founders is, and I've, when they're presenting, they might have figured out some business model also, but yes, most of the time that is a missing piece. They have no idea. And one of the ways to improve it or get some insights is also to figure out who your competition is. Many a times we see zero information on competition, feature by feature analysis. Sometimes I've seen businesses compare themselves to LinkedIn or Google. No, I mean, they don't do enough research on their domestic or US counterparts, immediate direct players. If you're building a HR tech SaaS platform, so you need to have granular research done कि भाई मेरे साथ में कौन है इंडिया में जिसको फंडिंग मिला है सीरीज ए सीरीज बी का, and then you develop your argument कि हाँ they have 10 features, we have 15, or they don't do this, we do this, right? Nothing on that. And that is something not the investor can say, right? If you give us that information, we get excited because we learned from the founders. But sometimes the requirement from the founders or the founders mindset is कि नहीं investors से ही सब मिलने वाला है. It doesn't work like that. So that level of granularity has to go into their plan. And adding to what Raj said, right? Because one of the ways to identify if you're the first time you're getting into this thing is, if you don't study your competition, you will never know what model you had in mind is being replicated or not, right? And if you think, and sorry to use this word, but a lot of founders are somewhat arrogant at times to say that हमारा तो competition ही नहीं. But you can't have that. If हर एक चीज का competition is there in the market, you might have figured out a different way of doing it, which is good, and which is what the investor might want to fund. So just wanted to add to that competition analysis also is very, very important to be looked into, because that gives you a lot of information on what needs to be done and what should not be done.
Good you pitched in and actually emphasized on that, because we face continuously as an incubation center this same thing only, and we try to actually convince them, but coming from you is always good. So now, since we have almost run out of time, so I'll just take a pause here, and I'll request Prati to please read the questions in the Q&A section. In the chat section also there are some questions. Any of the panelists can give a short answer to that, and perhaps if there is a query, we can take it offline also. So Krati, please go ahead and read the questions.
Yes, sir. So first question we have is, what does a VC or angel looks for in a technology startup? Product plus software plus logistic plus blockchain, it's in bracket, with a number of IPRs and sectors of operation.
So this guy, I know, basically he's a product-based startup. So he's making some physical product. So that's the reason he is coming from. He's asking product is important, software is important, logistic is important, blockchain or technology is important, IPR is important. So what is important for a product-based startup to raise VC or angel investment? Shashank, you might want to take
I honestly don't know how to answer that specific question because there are too many moving parts here.
options.
But for a product which is in consumer packaged goods, we are trying to look at the taste of the product. That is the foremost important thing. I will not look at an IP over there right now. Brand on a SaaS base, I look at the product outline and the usability for, let's say, B2B businesses, right? If it's, as Raj had mentioned early on, like if it's a biotech company, I'm looking for the IP. Or if they have a hardware piece, is there an IP around it? So there's no one answer to this because there are too many moving elements over here. But my point is that an investor's in whatever these things which we evaluate on, the investor is looking at whatever you've built out, is it working and is it big enough to be pushed out in the market? So don't bog yourself down. And I see this, founders end up building a great product or a technology, but they forget to sell it as a business. So you might have built a great product, but you need to pitch it to the investor as a business, because that's what makes sense to us. You talk about blockchain, what you'll teach us, we'll learn. We'll say blockchain. We are not technologists, right? We are investors. You tell us EIP, so okay, EIP, okay. I mean, we guys are investors. We are not. You guys are making us learn, right? So you have to teach us you have to sell it to it as a business, because technology we won't inherently understand. I can write a blog on technology, right? These are the trends coming, but I only know of these trends because I'm speaking with 10 founders. And then I'm learning, right? So it's the founders, you have to pitch it as a business which makes sense to the investors. And hence, that's what I like to say.
Mm-hmm. So next question Abdul is asking, he has a pretty long question. I know him, he's one of our incubity also. So so anybody, Raj or Gaurav, perhaps you take it. So product-based startups, there is a feeling if there is a product-based startup, physical product-based startup they are creating. So Abdul is into solar energy, low-cost solar energy products. So solar lights and other stuff he makes. So whether investment is possible in product-based startup, because we see investment happening in the technology sort of IT technology kind of domain, but physical product-based startups we rarely see any investment. So you want to?
So this particular question is about solar. Am I correct?
Yeah, he is into solar. Abdul is into solar.
Yeah. So solar is a sector which is got the fancy. It has been a sector where investments are happening, but unfortunately not in the physical manufacturing side. Now, specific to what Abdul has asked, there are funds which provide investments to fund research and build product capabilities. Now, in this case, the product is a manufactured product and the thesis can fit in. And these funds are government funds. We at Zone also have a fund which is supported by NST, DB, Nidhi Triple S, which specifically look at funding the product development and the validation of that product. I do not offhand know of who would help, but I'm sure certain ministries would have some support for this particular venture of solar. Having said that, there could be, and this is purely from experience, there could be angels who have been in the solar, in the energy space. And if this particular solution which he's building, or the product which he's building, has a differentiated element, is a need of the market, there could be people who would be willing to invest as angels. VCs, to my mind, a little tricky. I do not know, but looks a little difficult at this stage. But a couple of options will always be. See, we are a large country, and government has been giving a lot of support. It's a question of researching, doing secondary research, and also going and talking to some of these associations to figure out what are the options of funding available, especially in this manufacturing space.
Yeah, thank you.
I like to add to Gaurav's
Yeah,
point.
please. Yeah, please.
In terms of hardware, that's a wrong mindset. If founders think that investors are not there. Gaurav rightly said there are multiple schemes, grants. There are angel investors. To that extent, even micro VCs like ourselves, we have invested in 4 or 5, if I'm not mistaken, hardware startups. One is Accu Robotics, the other is Vecros, which is a drone startup. And actually, we've invested in a company called Jetson Robotics, which is a solar panel cleaning robotics company, which is reducing the man hours and the water consumption. But we invested not because hardware and we want to be the first. No, they made business sense. So if the founder has a good value prop and a product which is converting into a business, then today even micro VCs, and not only us but many other investors, will invest over and above the schemes which are available. So on the contrary, it is a great time to be kind of building hardware products because the mindset is changing now. It is not as efficient as technology, yes, but more than any other time, today is the best time to kind of start working on it and reaching out to investors.
Okay, Krati, you want to read the next? So quickly we can.
Yes, sir. So the next question is directly for Shashank. Does 100x.vc goes by sector or following any patterns? As this time you're focusing on environmental, health, and SaaS-based sectors.
So we are very sector agnostic, and our objective is whenever we invest in a company, we want to ensure that can we add value in the short term, 60 to 190-day frame, right? And that is when we want to get them more metric driven. So for instance, last time when COVID hit, we only did 9 investments in class 02 as opposed to 20 investments in class 01. And we invest in batches or cohorts or classes, as we call them. And the reason for that was because we only felt that we can add value in only 9 sectors. So we're very sector agnostic. We've done investments in agri-tech. We weren't doing travel tech last year. If I come across a travel tech company this year, if it has a very solid value prop, I will. But we are very, very sector agnostic. The core objective is, are we able to identify high growth potential companies with great founders? But most importantly, what value can we bring onto the table in the short term? 1 quarter, 90 days to 4 months.
Okay, so perhaps Krati, we have really overshot on time. So what we'll do is we'll keep the record of these questions. We'll try to answer these questions offline. At the end, perhaps if you want to, all the panelists, if you want to make one short concluding remark, so please go ahead and do that. And then after that, we'll wind up. So we'll perhaps, start in the reverse this thing. Raj, if you want to start.
I was going through those questions, and I'll bring in a perspective of a angel, my money, if I were to put one, because I don't know how a VC, I've never been a part of a VC. Whatever money I've invested, it's my money. So I need to be definitely asking a lot more questions. A couple of flags happen, like somebody said, my target customer is a municipal corporation. I have a question from Archana Agarwal. She says, the government tender of teaching in schools. All are great, opportunities. Yes, municipal corporations, Mumbai Municipal Corporation probably has a budget which is, bigger than some of the state budgets, which is fair enough. So it's a great customer segment. My only one question I ask, who amongst you have the ability, bandwidth, experience, of dealing with government tenders, going to a municipal corporation, getting those payments, it has to be a demonstrated ability within one of the founders. Okay, for me, that's a big flag. I'm not saying a red flag, possibly a red flag. I would not touch something if you're an early stage, startup dealing with governments can be tricky business. Okay. Especially if you are going to invest into a machine which is going to cost you 1 crore of rupees with the, hope and praying that, a municipal corporation will buy it. And once it buys that, they are going to pay you that money on time, to help you build the second machine. So unless somebody figures this out and, puts it down and says, this is how the tendering will happen, or this is how we'll, get paid for our work, I would not go as an angel into this